Hey, everybody, welcome back to an episode of Matt Money. I am your host, Uncle Matt Moolah, whatever you decide to call me. I'm cool with it. So, anyway, hopping up into what we're talking about today, we're going to be talking about the June dividend income and other sorts of income streams that have come in through the pipeline. Want to give you guys an overview, so let's hop right into it. So, hopping into it, dividend portfolio is valued about 317,000 US dollars at the moment. 401k is about 146.5. Altogether, that's about 463,000 US dollars. And looking at it from a dividend perspective, we're getting about $15,000 in dividends from that 317,000 part of the dividend portfolio. So there is a decent chunk of change, about 30% of the portfolio that's not really giving us anything at the moment. That's the 401k. And so in the future, hope to kind of change that, roll that over to an IRA, have a little bit more visibility as to what's going on now. That obviously $15,000 being broken out to the 317, that ends up being about 4.75% dividend yield. Not bad, right? So before we actually hop into the companies that paid me this month, let's just do a quick zoom in here and look at the allocations by sector, which I like to do just so you guys kind of know what's in the portfolio, and then we'll hop into what companies actually paid me. So this is the capital allocation by sector here. I generally have two of these graphs. I have the income by sector and allocation by sector, and then on the bottom there's the value by account and income by account. So obviously just want to highlight what sectors are really paying me right now, and you can see specifically energy, financials, and real estate are the top dogs here, and then if you kind of include your healthcare stocks in there, ends up being about 50% of the pie as well. Industrials hanging out about 9.3%. Information technology is about 5. Materials about 3.4. Telecom, which is my Verizon and AT&T stock, is about 5.4%. Have a decent amount of cash sitting there as well. And I think that this little nugget here might be ETFs, and I'm not exactly too sure what this one is because it's not really labeled at the moment. That's utilities. Okay, so I'm trying to grow that one because it's relatively small in the portfolio at the moment. Consumer staples is about 9, and consumer discretionary, like your GMs and some stuff like that, is about 2.1%. So financials, energy, real estate hold up about 50% of the portfolio. Definitely think that as some of these companies kind of recover, I'll probably sell out, one of which being in the top 10, which is Bank of Nova Scotia. I like it, but at the same time, some of these other sectors are a little bit underweight, and I think it's an opportunity for me to kind of take out from one of the companies I'm not really feeling. I know Wells Fargo is going to have a dividend cut later this month, but hey, I'm cool with holding Wells Fargo for the long term. I don't think that bank's going anywhere. I think it's well capitalized. I think they're really just getting hit improperly just due to the fact of the scandals that recently hit about 2-3 years ago, and I think they're still paying penalties for that. Hopping over to the income part of this particular graph, we have the income by sector. Same sort of actors, right? The energy, financials, real estate are really holding up the portfolio. So that makes up over 50% of the overall income coming from the portfolio. Same thing with energy. Maybe I'll diversify that out. It is hard to do this because every couple of years I do get a little bit of compensation from the job that I do in energy stocks. So I do need to be a little bit more diligent about diversifying that a little bit. But financials, this is obviously just due to the fact that I've been investing heavily into JP Morgan, Wells Fargo at these deflated prices that we're kind of seeing right now. And so also an opportunity for me to kind of close out some energy positions, some financial positions when I believe the time is right, and diversify those into some of these undervalued sectors within my portfolio, not necessarily for everyone's portfolio. Energy is almost 25% of the income. Financials is about 22%. Real estate's about 18%. Consumer staples about 2.5 or 10.5%. Sorry. Healthcare is about 6.7. Industrials is just under 5. Materials also just under 5. Telecom about 6.5. Utilities is just under 1%, and ETFs in cash barely yielding anything. Probably about 1.5-2% combined between the two. And a lot of that has to do with the fact that interest rates are continuing to go down, savings accounts are continuing to go down. They were about 2%, if I remember, sometime last year, and now they are down to almost 1%. I wouldn't be surprised if they dip under 1% for my long-term savings account very, very soon. So that's the income breakdown for the $15,000 that we're expecting. $1,250 monthly on average, which is awesome. So what does that actually mean when we get to what we actually received in the month of June? So overall, we received about $1,738, which is probably the best month. Let's just double check. Let's just scroll up for a sec and see if this is the best month so far. So let's go to June. Look at this reddish. And June looks like the best, man. So far, so good. Next year, this sort of dividend payment will kind of be a regular thing. Hoping to break some $2,000 markers in a couple months, maybe even have an opportunity to do so in September. If I make some aggressive investments in July and August, I wouldn't really hold my hat to it, though. It's really all dependent on what comes down the pipeline, and if I don't have any more dividend cuts. That being said, Wells Fargo is a September dividend payer, so I doubt that I will be hitting this $2,000 mark in September. But 2021, man, we're coming for you in terms of that $2,000 in dividend mark. But that being said, we did get over 2,800 in different income sources, whether that was Shopify options and YouTube income altogether. So Shopify was about $511. That's just part of the income investment websites that me and passive income investor run. The YouTube channel is kind of self-explanatory. It's what you're watching right now. And the options income is something that was relatively new for me, kind of coming into the beginning of this year. I had to kind of go back and see if I've made any other options income throughout the year. I've made some sparse options trades, but I saw an opportunity to really start getting after it this month, and I think I'm going to hold myself to getting about $150 every single month for this part of the year out. This could go up, this could go down, just based off the opportunities that was come into the market, but I'm hoping for another $150 or so, and maybe really try to aim to get another, $2,000 to $2,400 a year. I mean, that would be really beneficial, and that can help be reinvested back into the portfolio. YouTube forecasting out about $250 a month. Shopify forecasting out about $500 a month. So yeah, all those combined, just combining those three additional sources, we have about almost $1,100, $1,200, combined with the $1,700 that we're getting from dividend income, getting close to $2,900. So pretty excited with that $2,900 mark. I think that might be the highest that I've gotten so far. March, which I think was the second highest, was around $2,200. So if we're able to continue to steadily increase this month over month, we'll be looking pretty good. We'll be trying to get that $2,000 dividend mark here in the next couple months, definitely by 2021 for sure. And the $3,000 passive income or side hustle income, whatever you want to call it, mark, later on this year as well. And if not, we'll definitely hit that one in 2021 as well. So what companies actually paid me here in the month of June? So we had BlackRock. It's a great financials company. If you don't have any of them already, they're kind of pricey right now, but it is what it is. If you like iShares, I think it's a great passive investment that you can kind of look at. I think it's going to be ever growing for the near future for sure. And they're great dividend raisers. I think that they're definitely going to be a big contender in the future when it comes to dividend raises. You have Bryn Mawr Bank Trust. It's a small local bank. I've recently bought some more, so I expect that dividend payment to go from $78, just under $79 to $90 or so next time around. We had BP come in and pay me. I did buy a few more shares of BP. I reinvested those dividends, so we should be expecting about $216 come next time. And looking specifically at Johnson & Johnson, did buy some more Johnson & Johnson as well, so we'll see that go from $73 up to $84, which will be nice to get about $320 a year in dividend income from that bad boy. We have Main Street Capital. That's a usual suspect every single month. Paycheck comes in like clockwork. June or July is actually when I would expect to get a secondary dividend coming from Main Street Capital. They, generally speaking, pay 14 dividends a year, 12 monthly dividends, and then 2 kind of semi-annual dividends. And so yeah, that is how it is. They're just kind of withholding those 2 special dividends now. And then we got $70 coming from 3M. We have some realty income. I expect this to increase in the future as well. We have some PepsiCo income coming in at $55. Just bought some more, so I think we're going to get close to the $67 or $70 range for Pepsi in the future. Phillips 66 did sell this one, and this will be my last payment for Phillips 66. I took that money, invested it in, I think it's some energy or some financial stock rather. So that is what it is as well. You have Shell. I recently just bought this and increased the dividend that I was expecting. But that being said, they did cut the dividend and now we are looking at about $55 every single quarter. I did reinvest this as well, so this will buy us another one and a half, 2 shares, and hopefully be able to increase this for the long term. We had Stag Industrial for about $18. That's a good monthly culprit that comes and pays very regularly and very religiously for me. We have Visa for $6, which is a smaller one. We have Wells Fargo for 250. This actually went to go buy back 10 more additional shares, but of course they are planning to cut the dividend. This was averaging, if you forecasted it out, $1,000 a year in forward 12-month income before they cut it in the middle of July here. So I'm curious to see if they cut it by 10%, 20%, 40%, what that's really going to do. ITOT, it's one that I've continued to invest in. This is where my YouTube Moolah account kind of goes right now. So it's nice to see that $9 every single quarter is kind of coming in perpetuity, just based off the YouTube income that I've made from YouTube. I do have about 50% of the YouTube money invested in 1 share of Amazon and the remainder in ITOT. So this could be a little bit higher, could be double, $18 a quarter, but I've decided to get myself a little bit of growth utilizing Amazon as well. You have Johnson & Johnson, small position here for $2. You have a small position here in 3M for $2 or $10 here. And let's just see what else. We have LYB, which is a chemical company, for $73. We'll continue to buy that. Want to get that up to 100 shares or so. We have Main Street Capital again in my Roth IRA, not in my individual brokerage account. This pays me about $32 as well. And we also had Johnson & Johnson in the M1 Finance portfolio coming in at just under $22. 3M at just over $25. Visa at $4.74. QYLD, which is a new investment here in the M1 Finance portfolio. Nothing yet. We'll expect to see some updates on that one come July. QQQ, nothing for that one yet either. You have ITOT, that's $2.93 as well. And I believe I sold out of ITOT is a regular one that will be continued to be held in the M1 Finance portfolio. You have a small position in Shell in Robinhood. You have a small position in Southern Company that is now up to 54 shares, I believe, so hopefully this is going to continue to grow in the future. $15 every quarter, hoping to get that a little bit larger in the future. You have WTRG, which I actually just started buying another 50 shares a month in this one, or $50 a month in this one, so hope to see this one go up as well. $177 from Exxon. IBM paid me a nice $9 check, reinvested all those. Realty Income, very small 4 or 5 share position here, got me $1.25 in income. Waste Management, $3.32. Then we also have some shares that I have from work for $190. Cardone Equity got my $168 dividend payment coming from Cardone Equity Fund 5. They didn't pay the last 2 months, so this $56 is actually the culmination of the last quarter, really, kind of coming under one single payment. I presume it'll go back to regular distributions come next month. So nice to see that that kind of came in, was able to kind of take that and invest it right back into the individual brokerage account. You have you have 2 different savings account now. You have my website savings, where I'm saving to potentially buy an additional website. And then you have my personal savings, which I'm still not sure yet. Is that going to be real estate? Is that going to be other businesses sort of savings? Is that just going to be personal savings? Still got to work on that one, but I walked away with $14.79. So overall, pretty good month. $2,800 from total income here, whether that was Shopify, YouTube, options income, and then you had $1,700 in total. So first half of the year looking pretty healthy here. $6,400 in terms of total income coming from dividends, and then if you were to look at the total, we're just under $12,000, sorry, for the first 6 months of 2020. So hopefully we're able to increase that to get it to about $14,000 in dividend income and about $25,000 or more in altogether side income, right? Just 25 grand. That would be awesome to see in the future. And I think that's going to be relatively it. I generally dive a little bit deeper, but want to see if you guys just like these smaller, concise videos a little bit more. Let me know in the comment section down below, and I will talk to you guys on the next video. Cheers.